Today, we'll be analyzing Tesla as a potential investment position. Feel free to leave a comment below for which stock we should do next. So, for those of us not familiar with Tesla, the business model is as so. It's an electric vehicle company, clean energy technology company that designs, develops, manufactures, and sells fully electric vehicles, energy generation systems, and storage systems. The company has a strong focus on innovation and sustainability, and it is constantly developing new technologies to improve its products and services. From the management side, Elon Musk. That's about it. I'm sure all of us are pretty familiar with who he is, who he has been, what he has done to previous companies, and his impact on the current companies that he is currently either in control of or working with. Andrew is the Senior VP, Powertrain and Energy Engineering since October 2019. Drew served in various engineering positions continuously since joining Tesla in 2006. And then Zachary, who is the CFO of the company since 2019. Holds dual degrees in economics and mechanical engineering from the University of Pennsylvania and from Harvard University. I don't think we have to say much about Elon Musk, but the two interesting things about both Andrew and Zachary are they are and have been actively involved in what Tesla is. Tesla is, of course, an automotive and technology company, and the fact that even the CFO has a degree in mechanical engineering, it shows that the people involved are either passionate or very well understand what's going on within the company. It's not just someone who has focus on or talent within the financial industry. It's also someone that understands the business. So the current valuation, this changes obviously on a daily, weekly, monthly, yearly basis. The PE ratio is 46.48. The PS ratio is 6.43. And the price to book ratio is 10.5. Out of these three, they are very, very low in terms of historical valuation of Tesla. Now, these don't exactly determine if Tesla is currently undervalued or overvalued, but for a comparison, yes, they are extremely low in relationship to the historical valuation. And for an example, the PE ratio of Amazon is above 70. So, of course, valuating stocks is a little bit more complex than just the ratios. So, going to hit you guys with the risks for starters. Usually, we like talking about the good things, and then at the end, we quickly talk about the risks, but we're going to switch it up here and just hold them at face value. One of the biggest risks that Tesla faces is their production growth. A lot of critics had said that they're not going to be able to keep up with demand because of the lack of production growth, and therefore companies like Toyota, Volkswagen, Honda, Ford, etc., they are already producing at a large capacity at the moment. So all they really have to do is change their factories from developing gas-powered and ICE vehicles over to electric vehicles. We think that Tesla is already positioned to outperform the production scalability, and by looking at the numbers, they certainly are. So vehicles produced by year, you can see that in 2019, about 1,000 a day at 365K. And then into 2020, we saw a 40% increase, 2021, an 84% increase, 2022, another 40%, and then the expectations for 2023 are nearly another 40% increase. Now, Gigafactory Mexico is expected to be operational this year in 2023, and the production expectations are about 500,000 vehicles per year. Now, these growth numbers vaguely include this production expectation for Gigafactory Mexico, and as we can see from 2021, whenever gigafactories open up, of course, there is a larger supply and larger amount of production. So if Gigafactory Mexico gets opened earlier than expected, we will see a larger production expectation out of Tesla. But in terms of production growth being a risk for the company, we just don't see it right now. Looking at the numbers year after year after year, it continues to grow above expectations. And with the addition of larger gigafactories and things like vertical integration, figuring out how to make more cars at a faster pace for cheaper or for less, that's something that can certainly counter the risk of low production growth. The other risks included are competition and demand concerns, and to that we say nope. Really. No, we just don't actually see competition being an actual concern right now. Potentially in the near future, and it definitely could be in the far future, depending how Tesla and its competitors expand into the EV market. In terms of demand concerns, let's run through that a little and break it down. So in 2022, Tesla delivered every single vehicle manufactured, and that was 40% more than 2021. Now, this is significant because as Tesla sold out of every vehicle in 2021, the rhetoric against that was, well, they didn't produce that many. It's much easier to sell out of a lower supply. That makes sense. But the next year, they made 40% more vehicles, and once again, they sold out. So really don't see that opinion formulating anymore because they continue to sell out over and over again. Now, although I did put Ford and GM are nowhere to be found, we can also say this with Volkswagen, Audi, Mercedes, Toyota, Honda, etc. Just to throw some numbers at you, in terms of United States competition or domestic competition, Ford and GM together produced around 100,000 electric vehicles through 2022. So for every vehicle that they were producing behind the scenes, Tesla was producing another 10 vehicles. So in terms of production, in terms of profitability, in terms of a lot of different metrics that we're going to dig into, United States competition is just simply not there. Looking at the numbers, looking at what they've done so far, we simply can't say that they're anywhere close to Tesla. In relation to other larger producers, we can even consider the largest vehicle producer on the planet, which is Toyota. They produced about 10 plus million vehicles in 2022. And out of those 10 million, about 82,000 were battery electric vehicles or EVs. That does represent a significant increase from the 14,000 that they did before, but their guidance says that they won't be able to produce 1 million electric vehicles until about 2030. Last year, Tesla produced more than 1 million vehicles. So in terms of production progress, Toyota, which is the largest automaker on the planet, they are nearly a decade behind Tesla in terms of production. That's definitely notable and definitely not a concern in terms of competition or there being a demand concern with Tesla. So more about the demand. In the United States, the Model Y has been sold out since February 2023. Now, orders are going through at the moment, and you may not be able to get a new Model Y until late May or early June. And depending on when you're watching this, maybe you already can. But the more interesting thing is that these sold out far before the quarter ended. Now, does that sound like a demand concern? It certainly does not. You know, we're clearly going through tough economic times. That's a car that's around $50,000, still being sold out within the first quarter. It does not seem that there's a concern for demand at all. And then lastly, the Model Y is the best-selling car in the world by revenue. So by 2024, it will be the best-selling car in the world, period. Now, best-selling car in the world by revenue means that the Model Y out of all different car models generates the most revenue for a company. The most sold vehicle in the world is created by Toyota. It's the Corolla. But by 2024, even the lower projections see that the Model Y could be the best-selling car on the planet. So in terms of is competition creating pressure for Tesla, are there demand concerns? We simply don't see it right now. The next thing that we're going to be digging into are the defensive edges of the company. So the first is brand reputation and pricing power. Tesla has become synonymous with electric vehicle, and this is very similar to how Google has become synonymous with internet search. Brand reputation is, of course, very powerful from a psychological standpoint, and it captures returning and new consumers, and it fends off the competition. So this is really good because pricing power. So what do I mean by that? Well, on the right, we can see net profit per vehicle. Now you see how much more profit Tesla makes off of their best-sell car or their best-selling EV. They only make EVs in comparison to how other car companies make profits or lose money based off of their best-selling EVs. Now, if you take a look at Ford, they lose money. NIO loses about 20 grand. XPeng loses a little over $10,000. Tesla makes nearly $10,000 per vehicle. Now, even though prices have been being cut, this is something that is actually a positive and potentially a really smart business move from Tesla. Because when you think about it, if they're able to cut the price of this by, say, $2,200, they're still making a little over $7,300 for profit per vehicle. If any of these competitors decides to do that same move, well, they're no longer profitable. So Tesla cutting their prices, yes, it of course increases demand artificially, but it's still demand being increased. And two, it also decreases the profitability of other companies. So it's a double-edged sword because you're bringing demand towards you and you're actually hurting the competition. If you were just taking away competition, that's one thing, but forcing those companies to have profit issues or not be profitable at all while your demand is growing, once again, that is a double-edged sword and a fantastic defensive edge for the company. The next is vertical integration. So you can see that Tesla, whether it is the seats in the vehicle, the infotainment center, the full self-driving chip, the insurance, the supercharger, the Powerwall, anything that is built within the Tesla vehicle or within the Tesla ecosystem, it's made by Tesla, right? In comparison to another car. You know, some cars have some of their infotainment centers are Apple CarPlay or Android Auto. Some seats are made by Learcorp or Recaro. Tesla Service, you know, those are, for other cars, it's dealerships. Or the powertrain, you know, most are made by Bosch or Mitsubishi. Virtually everything within the Tesla vehicle is created at the Tesla factory by Tesla. This improves the supply chain, improves profitability, and increases their ability to produce more and more vehicles. Superior technology. So we see this within safety, software, and self-driving. So starting with safety, Tesla vehicles are the safest cars ever created. According to Euro, Australia, and USA standards, the Tesla Model Y scored 97% in adult occupant protection and 98% in safety assist. That is higher than any vehicle in history. The software. This is basically AI in a car. Of course, constant data collection from millions of vehicles and instant updates creates an operating system that learns and improves daily. So as of last month, Tesla has collected 1.8 billion miles worth of data, and that number just increases and compounds because more cars sold, more vehicles on the road, more driving, more data, smarter vehicles, better product. And lastly, self-driving. So they are many years ahead of competition in terms of current self-driving and currently in first place in the race to achieve full self-driving. BYD is a large competitor out of China, and their CEO actually recently came out and said that full self-driving is nearly impossible and it would be more valuable than the cars. So, two reasons why this is a great thing. Them saying it's near impossible, unless they're lying or something, their biggest competitor saying that full self-driving is near impossible may foreshadow that they're abandoning that project. That would, of course, be good for Tesla. And then second, the CEO admitted that it would be more valuable than cars. This is huge for Tesla. If Tesla is the first to accomplish full self-driving, it, of course, crushes competition, right? If you were going to select an EV at a dealership or you're choosing between EVs, imagine that one could drive you wherever you wanted to safely and the others couldn't. That would be an obvious demand increase for that product. The other things to consider are potential avenues of revenue that this could open up, right? You could have robo-taxis, which is the far-out talk that Elon was speaking about, and you can simply have a subscription to full self-driving, maybe certain attributes or different parts or different tools within the software. What it really does is create more value for the product and also increases demand. So here's a quick image and statistics on self-driving. So the number of vehicular accidents per million miles, this is a study from 2022, the average vehicle, the total U.S. vehicle fleet actually, so every million miles, there were about 1.53 accidents. Now, Tesla vehicles with no active safety, about a 50%, you could say a little more than 50% decline in total accidents. And then when you have FSD beta engaged, so the full self-driving beta version, you're at 0.3 crashes per million miles. With full self-driving, now remember, this is the beta version, it's not completed, you are 5 times less likely to get into an accident. So all of the concerns are, do I trust full self-driving? Is this something that's going to be safe? If you don't have it on, you're 5 times more likely to get into an accident. Clearly, this is proving itself, and only being in the beta version, this is something that can only improve as time goes on, more data is collected, and technology continues to grow. So let's do a quick rundown of the financials. The numbers above this line are 2022 year end, and then the numbers below are from the most recent earnings report. So everything green, of course, that's a positive, but we can quickly go over revenue, which was about a 60% gain from the previous year. Their net income, their profitability, right, 100% gain from the last year. Their earnings per share, big jump. The cash flow, big jump. Operating margin improved by 31%. And then we look from an investor standpoint, return on equity, return on assets, both increasing well above expectations. And even the debt to equity ratio was a 24.3% decrease. So throughout last year, they continued to pay off debt and improve their overall balance sheet. Now, with the most recent earnings report, there was a meet on earnings per share. There was a miss on revenue. So pretty much in the middle in terms of positive or negative. But the best things that we were able to take from it is that Tesla is still the most profitable major automaker in the world. There are companies like Ferrari that have better profit margins, but I would rather compare Ferrari to another luxury automaker in comparison to, comparing Tesla to Ford or Tesla to Toyota, etc. Now there's a $25.2 billion cash on hand. That's a 25.3% increase year over year. And then looking at their debt, $1.91 billion in short-term debt, $3.6 billion in long-term debt, 7% decrease in short-term debt, 47% decrease in long-term debt. So what I get from this is that even though they've had 6 price cuts on their most profitable and largest revenue stream, which is the Model Y, right? They continue to drop the price on that. They're still the most profitable major automaker. They're still growing the amount of cash they have, and they're continuing to pay off a significant amount of their debt. This is happening as their prices are decreasing, as competition is so-called coming after them, and we have to look around in the current environment that we are in from an economic standpoint. It's not the best. So this gets me really excited for Tesla, what they might be able to accomplish when consumers are a little bit stronger and when the economy is overall positive. So looking forward, and these charts and expectations are thanks to our friends over at TradingView, but the EPS and revenue expectations for the years to come are very positive. We can see a strong increase in earnings per share from 2022 into 2025 and 26. And then looking on the revenue side, there is strong expected growth for the years to come. From 2022 to 2026, that is over a 100% increase in revenue, bringing Tesla right under $200 billion in overall income. Next, we're going to be digging into the future of Tesla, things that are currently undergoing prototype production, things that are already being sold, and then things that are soon to come in the near future. First is the Cybertruck. This is supposed to be $50,000 estimated sale price. They have a production goal of 250,000 units annually, and this could add $12.5 billion in additional annual revenue. Production is set to begin in the next 6 to 9 months, so you could potentially see these being delivered and on the roads before the year ends. Now, these numbers don't factor in, especially the revenue, don't factor in growth probabilities or percentages. What they do factor in is initial overall production. So these numbers are, of course, subject to increases or decreases. Future of trucking. So combination trucks, semis, they account for a little more than a quarter of overall U.S. vehicle emissions. The most interesting thing about this is how it can actually pay you back in a sense. So at $150,000 per vehicle, charging with electricity is approximately 2.5 times cheaper per mile than refueling with diesel. So the estimated fuel savings of up to $200,000 comes within the first 3 years of ownership. So after 3 years of owning the vehicle, in itself, it has already paid itself back. And Tesla says that they're on track to produce 50,000 semis by the end of 2024. Like I said, at $150,000 per semi, this could add $7.5 billion in annual revenue, and that is also not considering growth. So between the trucking in terms of semi and Cybertruck, this is something that could add, give or take, $20 billion to annual revenue. not considering growth. Next, we have the affordable EV. Now, this is the most speculative. You can tell by our image, it's just a prototype drawing, but this is the most speculative portion of Tesla as a company. It's labeled the Model 2, expected to have a $25,000 sale price with 20% gross margins. The thing about this is it captures market share. We know that cheaper, more affordable commuter-style vehicles like the Corolla, there's a reason why they sell like hotcakes. They're very cheap, they can be produced easily, they have great margins. Although the Model Y has sold out like crazy and it's the best-selling vehicle in terms of revenue, Tesla could absorb more of the overall market share or the auto market share with a price-sensitive EV. Now, this is something that we haven't even seen pictures of it. We don't know the specifics, but it is something that we could definitely get excited for because it opens up Tesla to an entire new portion of the addressable market. Lastly, we'll be looking over Tesla's energy segment, which is usually pretty overlooked in terms of investor conferences and earnings reports and overall numbers, but this is something that is growing exponentially and could really sneak up behind potential investors. So the solar roof and Powerwall. The solar roof has created serious competition within the solar industry, comes with a 25-year warranty, and is eligible for all tax credits, just like regular solar panels. Produces 250 to 450 plus watts of energy for a home each hour, and those revenues grew by 45% in 2022. Now, the Powerwall comes with a 10-year warranty, creates continuous output of 5 kilowatts, and could keep a refrigerator running for 67 plus hours. So it creates a whole entire backup for your home if there were to be a power outage. Now, Powerwall revenues increased by 90% in 2022. Now, the more exciting part of the energy segment within Tesla are the megapacks. We've already seen these made a pretty significant impact on the world, on the environment. Hawaii is one of the first states and currently one of the only states to not use coal at all anymore. That was largely thanks to the Kapoeli energy storage facility. I could have completely butchered that name, but it is a Hawaiian energy facility, and it is one of the largest battery systems in the world. This battery system is composed entirely of megapacks, so we can thank Tesla for making Hawaii one of the only non-coal using states in the country. In terms of sales, megapack revenues increased over 100% in 2022, and according to a 2023 Bloomberg report, Tesla is expected to generate $16 billion in revenue from megapacks by 2025. This energy storage system is already creating significant progress for our planet, and growth happens to be exponential. Considering what Tesla has done in the past, is doing now, and plans to do in the future, we believe that the company is a once-in-a-lifetime investment opportunity. And not only has Tesla survived the current economic storm, but it has thrived. And very rarely does the combination of defense and growth exist in the market. Tesla seems to be all of the above and more.